Hey, everybody, welcome back to the show. Super excited to have a very special guest today with a fascinating story. Kevin Jiang, who is the co founder and managing partner of Mangusta Capital, and also a member of the founding team of SoftBank Vision Fund. Kevin, super excited to have you on the show.
Thank you so much, Kip. It's great to be here and excited to chat.
Yeah, absolutely. Well, why don't we start out with just kind of your origin story, your kind of comic book, you know, version one, just kind of who you are and how you came to do what you're doing now.
Yeah, absolutely. Trying to keep it relatively short, but I grew up actually in Silicon Valley in the Bay Area, in Cupertino, which everyone now knows as kind of the headquarters of Apple. But back when I was kind of growing up there, and way back, it was still like fruit orchards, and so wasn't kind of the powerhouse alien spaceship kind of place that it is now. But I came here. I was born in Canada and grew up in Cupertino. And my parents were first gen immigrants from China that came here to be engineers and worked at a lot of the semiconductor companies in the 80s and 90s in the Bay Area. So I grew up around everything that was happening, the boom and the bust, and was just excited by everything that was happening in Silicon Valley. And it's funny because you see a lot of parallels in the semiconductor space, which has obviously become super important now in the AI era. But even when, chips were first starting to be made in the 80s and 90s, it was, all the rage and obviously a huge, huge area of growth for the US. And so, grew up in the Bay Area, fascinated by everything that was going on, wanted to be a part of it, and thought that the best way was just really to get a good business background. So I studied all the way across the country in the East Coast in a little town called Boston and studied at Harvard, majored in economics, and then ended up joining investment banking at Goldman Sachs after that. So I moved to New York, worked there for a couple of years doing M&A, IPOs, helping a lot of financial technology companies, go through those types of transformative events. And then continued going down kind of the traditional finance and investing career path. So I joined a private equity firm after that called Apollo that does private equity buyouts. So leverage buyouts, we did everything from consumer retail to technology to healthcare. And so I did that for a couple of years. And in 2016, 2017, when Masa, the CEO and founder of SoftBank, was raising the first Vision Fund, I was fortunate enough to get a call and, sounded like a really amazing opportunity. And sometimes life puts these types of opportunities in your hands and you've got to make a decision whether you kind of take it or not. And so seemed like a really cool opportunity, decided to take it and join and be one of the founding team members at the Vision Fund, which is the $100 billion vehicle that Masa raised in 2016 to invest in late stage growth companies in the technology space. And so that's really where I spent the majority of my career over nearly 10 years, building out the team, leading our investment efforts in North America across supply chain logistics primarily. So I led a number of deals, including Flexport, which is one of the largest digital freight forwarders here based in San Francisco. Another company called ShipBob, which is an e-commerce fulfillment business based in Chicago, that's focused on providing fulfillment solutions for small, medium-sized merchants on Shopify and other platforms outside of Amazon. And had a great experience, really working with a lot of our portfolio companies, sitting on the board. And really, just built out my network experience, dipping my toes into venture capital and technology investing at a late stage for the first time. Over the years, I had built a great relationship with a number of different investors and LPs. And so one of them was an Italian family office that's now the anchor investor for our new fund called Mangusta Capital. We worked on a couple of deals together and built a great relationship. I had been thinking for a while about starting my own fund because I see a really great opportunity within early stage AI investing, particularly on the
Yes.
application stage, which happy to chat a little bit more about. And we shared this vision with the family office, and they decided, they were really excited about the relationship and the background that I had. They decided to anchor the fund, and so that's how Mangusta Capital came about. Mangusta actually means mongoose in Italian,
Okay.
and it's kind of like our spirit animal. I think of it as, we are like the fierce, if you're not familiar, the mongoose is this small kind of rodent animal that punches above its weight. It fights
Uh-huh.
cobras. It's actually a pretty symbolic animal in a lot of cultures. And for me, I thought that was the best kind of metaphor for who we are. We're a first time emerging fund manager focused on delivering performance above all else. And I think that we're able to do it just staying nimble, focused, competitive, tenacious, compared to a lot of the large Silicon Valley behemoths that have raised billions of dollars. I won't name any names right now, but I think a lot of folks have just gone into the AUM game, raising billions of dollars of capital and not necessarily focusing on performance, which is what we're really, really focused on. And so, I'll pause there. We launched Mangusta Capital about 6 months ago. Super excited. Always wanted to do kind of my own founder and entrepreneurial journey, and that brings us here to today.
Oh, that's exciting. Congratulations.
Thank you.
What's the thesis of Mangusta, or what opportunities are you targeting?
Yeah, absolutely. So, I see a really great opportunity in the early stages of AI. And I think we're still really, really in the first, second innings of everything that's happening. In particular, I would say we're focused on pre-seed, seed stage founders. So 500K to $1.5 million check size into founders that are building application technologies using AI to solve specific industry problems. So if you think about fintech, if you think about healthcare applications, if you think about legal applications, AI just has so much potential to actually transform these industries, whether it's using, providing automation services, providing better research services, to be able to, help people with decision making, analyzing big sets of data very quickly, going through millions of pages of documents in minutes rather than hours and days that it takes a person. And so for us, we're just really excited about the industry applications that across all these different verticals that AI is going to be able to make large monetary impacts on day one and drive value for a lot of incumbents in existing industries. And so that's really what we are investing behind. And what I call it kind of vertical AI, which is a little bit of like a play on the previous trend of what we used to call vertical software, which is essentially thinking about, think of like Service Titan, which is, now a public company that used to be a software business for tradespeople, plumbers, electricians to be able to schedule their jobs and whatnot. We think that there's going to be a similar revolution using AI technology to tackle these specific industry solutions going forward, where software wasn't able to provide really, really sophisticated analytical tools. Now AI is able to do that.
Oh, it's very exciting. Very, very exciting. So, and maybe stepping back, how did you connect with the family office that's really kind of your foundation investor?
Yeah, absolutely. So the Del Vecchio family is actually one of the most prominent Italian families. They're the founders behind Luxottica, which, if
Huh.
your listeners may or may not be aware, it's an interesting, really interesting business. It's $100 billion publicly traded business in Europe that very few people have actually heard of, especially in America. But I think they try to stay a little bit under the radar because they more or less have a stranglehold on kind of the eyewear business and the eyewear industry overall. So they
Okay.
own Ray-Ban, and then they also have they own Sunglasses Hut, Lens Crafters, all the distribution channels,
Huh.
and they have licensing agreements with basically every luxury brand out there. So if you think of, everything from the Chanels, the Dior's of the world, essentially everyone uses Luxottica to manufacture and distribute their eyewear, whether it's sunglasses or regular prescription eyewear. And so it's a super interesting business founded by an Italian entrepreneur and patriarch of the family who actually passed away last year. He had a super interesting background. He actually grew up as an orphan, coming from nothing in a little
Huh.
town in the mountains of Italy, and basically built this huge behemoth over the last 60 years. And so he's obviously left behind a number of family members and heirs. And so I was able to meet one of the sons of the family through conferences in Europe, and it just happened to be at a GP LP happy
Huh.
hour where some venture capital investors as well as family offices were chatting, and we just hit it off really well and decided to collaborate on a number of different deals. And really, it's a testament to kind of building a relationship, right? We kind of built that over about a year of looking at things together, exchanging thoughts. And I think honestly, that's the way that business is done in many parts of the world, is you have to build a trusted relationship with folks. And so, from that kind of first meeting that we had at the conference to about a year later, that's how we kind of got comfortable with the working relationship that we had, as well as the synergies that both sides bring to the table, because they obviously have a lot of relationships through the consumer retail network that they bring through Luxottica, as well as just European family connections, which have been very helpful for investor relations and fundraising. And then for me, obviously, I bring over 15 years of experience investing across the U.S. and over 10 in Silicon Valley doing venture capital and growth equity investing. And so I think for both of us, we could just see how it would be a really synergistic relationship to team up together. But it's as all things in life, I like to think, there's always an element of fortune and luck, and being at the right place and meeting the right people at the right
Mhm.
time. And so very grateful that I was able to kind of put myself in the right place to be able to meet such interesting, great folks.
Yeah, that's incredible. Yes, absolutely. How about what are some of the strategies either now with the fund or just kind of over your career that have proven most effective for you in identifying and capitalizing on high growth opportunities?
Yeah, no, I think, at the end of the day, it's really about management teams when you look at venture capital and technology investing. I think whether it's earliest stages, Series A, Series B startups, all the way to even pre-IPO, startups like Series D, E, F, even as you get really late stage, it just makes a huge difference that you're teaming up with a management team that is exceptional, hungry, driven, knows what they're doing, and can scale the business to the next level. And to be honest, it depends on, the management team may be right at a certain stage of the business and may graduate out. You need someone
Huh.
more, like a public company CEO as you get later stage as well. But at the end of the day, it's a people business. Venture capital is a relationship business. You've got to be able to build relationships with founders, other co-investors, to share deal flow, to find access to opportunities that you wouldn't otherwise get access to. And so at the end of the day, I spend, most of my time really building those relationships, sourcing opportunities, going to events, dinners, going to conferences, whether it's smaller, kind of private events or larger events, to really meet the most interesting people that are building the most interesting products. And over the years, I think the skill set that has really served me the best is pattern recognition of
Mm.
who are great founders and what characteristics and qualities do they bring to the table. And so for me, there's a number of different things, but as the kind of Mangusta name
Huh.
implies, we're always looking for really hungry, tenacious entrepreneurs that want to push it to the next level, right? They have a chip on their shoulder, whatever it may be, from their childhood, from college, from their first job, and they're always wanting to push it to the next level to get, to be able to make it to, the American dream or whatever it is that they're trying to achieve. And so for us, I think that's first and foremost the most important thing that I try to sniff out whenever I meet someone. And then on top of that, there's a number of other things that we'll look for that I think are also really important. But really, that's the first one. I think, beyond that, I'd love to see someone who's doesn't have an ego, can build a team around them that really complements their skill sets and can outshine the founder in a lot of different ways, because
Mhm.
you need folks that are A players that are going to bring things that the founder can't bring. I usually like to see repeat founders. So you don't have to be a huge successful repeat founder, but I like to see that you've maybe tried your hand at a startup or two beforehand. It's fine if you failed. It's fine if it was a small success, not a big one, but at least you know what it takes and you've decided to take the journey again. Whereas, a lot of first time founders, not to say we won't invest in first time founders, but I do think they go in kind of eyes wide open, not really knowing exactly what's kind of the right path, and having to figure things out the first time around can be pretty rough. So those are some of the things that I really look for. But at the end of the day, it's really relationships and the founder quality, which is something that just takes years and years of experience and building that pattern recognition to be able to really think about who are the right folks you want to back.
Yeah, absolutely. How about on leadership? I mean, aside from what you just shared there, I mean, whether it's for you personally or as you're looking at founders, any, thoughts on how your personal definition of leadership has evolved or grown over time?
Yeah, no, it's a really interesting question. I think for founders and investors that how I think about it in terms of investing in these founders, I would say the biggest thing is really leading by example. I kind of like the idea of kind of servant leadership because it illustrates what you as a leader want everyone else around you to be doing, right? It's leading by example. It's doing the things, it's being nimble, doing things that, maybe other CEOs or founders might think are beneath them. But I think it's really important for a founder and CEO to actually be in the weeds of a lot of the day-to-day business and product because at the end of the day, like that's what's most important for running the business. I'm not saying that you want someone who micromanages everything. I think a healthy amount of obviously delegation, learning how to manage appropriately, give people responsibility, and empower their employees to really take rope and run with it is obviously important too. But I think the best founders that I've seen are ones that actually do end up getting a bit in the weeds and have their pulse on a lot of things that are happening. And I think it illustrates leadership through example. And people, I think a lot of employees really respect that and get motivated by that as well. I think the other thing that I is maybe a little bit controversial or different when it comes to leadership is I do also think it's important for founders to understand where their skill set lies and when a company may have scaled to a point where they kind of graduate out of the business and they need a more perhaps late stage public company kind of CEO or founder figure to really take on the reins and move the business to the next level. A lot of founders are great at going from 0 to 1, but I think a lot of those great founders, similarly are not great at taking it from 1 to 100. And
Hmm.
so a lot of times you've got to have folks that come in for that 1 to 100. And I think it would do a lot of founders, both an economic as well as an emotional service to really understand, hey, if I actually want to maximize the outcome here for my business that I founded, and I still own, a large portion of the equity in the business, I should think about, hey, is there someone else that's better fit to be running this business going forward? And so, it's a tough conversation, and it's certainly not an easy decision as well to make on both sides because, there's certainly cases where VCs or the board has removed founders that maybe should have stayed on and continued to run the business. But I think it's one that every founder should certainly think about and evaluate on an ongoing basis as they kind of build the business and think about at what stage are they the right fit to be running the business.
Yeah. How have you, I mean, I'm sure there's no perfect answer, but at what stage or how do you evaluate when, or how do you recognize when that point has come, when it's maybe time to bring in a professional quote unquote CEO to take it to the next level?
Yeah, no, it's really a case by case basis, right? It just depends on the situation and the founder that, the skill set they bring to the table. For example, a lot of businesses that we see selling to enterprise, Well, actually, I'll give a kind of broad example. So, a lot of businesses that have perhaps a more technical founding team, whether it's frontier technology, robotics, and such, you have a really great technical team of co-founders that have been able to build a really exceptional product that, arguably no one else can build. But when it comes to actually selling that product and scaling the business side of things, they often don't necessarily have the skill set to really take that to the next level. And so that's one clear example where you actually could hit that roadblock relatively early on, where the technical founding team is not necessarily the right team and CEO to bring it forward to the next level, and really scale the business side, grow the sales team, evaluate the go-to-market strategy for which customers to be targeting, which trade shows, which conferences to go to. I think that's, one clear example where you could hit that roadblock relatively early. But it honestly depends on a case by case basis on the industry and the founder and the skill sets that they bring to the table.
Oh, very good. And how have you seen that conversation go well with the founder, and or maybe some examples of how it's gone not so well also?
It's funny. I don't think I've ever seen it gone well. Uh, but, I'm sure there's examples out there. Unfortunately, I've probably seen mostly a couple of examples of conversations where it's tough. This is literally someone's baby. They built it from the ground up, maybe 5, 10 years in the making, and it's really hard to let go, right? And they're probably used to being also the top dog, or the lead guy in the business, and so it's really a tough conversation. And I think it's a really, really difficult one to have, and very rare to see a very smooth, good transition. But there's obviously examples out there.
Sure. And do you see the founders usually, I mean, stay on board in an active role, just in a different role,
Yeah,
or they typically step away and really try to like hand off?
yeah, no, I've seen both, I think, but I have seen it work out well where, say, like that technical founders, right? They take on perhaps a regular board seat. They perhaps become the chief technology officer, or they become a special advisor for the product team or the R&D team. So they kind of go into a role that's a better fit for their skill set, right? So I've definitely seen that. I think the other situation I've seen is, sometimes if it's not a great kind of conversation and it's a tough parting, it can often be hard for founders to really stay involved with the businesses in that case. And so I've seen situations where they just have a clean separation and they kind of walk away as well. And obviously they keep their shares and ownership, but there's certainly situations where it's just hard for them to stay, involved with the business after a transition like that.
Yeah. How about, can you share your approach to, okay, now you're going to look for the next leader to take over from the founder, just what your approach is to attracting and retaining those high performance leaders to come in, and knowing they're coming in and stepping in for a founder, and it may be a little dicey in the beginning. How do you
Yeah, no,
find those people and bring them in?
yeah. No, look, it's a tough process, right? Because you're really kind of changing the DNA of a company at the very head of the ship. And so, there's a lot of different approaches that you can take to it. The best, I think, is just looking within your network and looking within your peers' networks to be able to hopefully find someone that maybe has adjacent industry experience. Maybe they've been a founder or, a senior leader at a company in a similar industry. I think that, a lot of venture capital firms and VCs are able to really tap into their network to help find that next candidate. I think that's usually best because you have vetted candidates, people that, can provide like a background, or kind of what do you call it? Like a, not necessarily a background check, but basically like a reference, or,
Sure.
kind of a soft reference. And then I think the other option is obviously to use a headhunter, which you can, certainly hire executive recruiters to find someone with the right background. it just becomes a little bit tougher because then you do have to really do a lot of homework in terms of before making the official hire, finding out if, you can find enough references that have really worked with this person, can back it up, and those references ideally are people that you really know or trust as well, right?
Sure.
So I think it just opens up a little bit more unknowns, but that's certainly a path that you can take as well.
Yeah. How about maybe what's one of the biggest challenges you've faced in your, whether it's in the fund now or just over your career and how you overcame those challenges?
Yeah, look, I think a lot of the big challenges that we really face within this industry are ones that are kind of affecting everyone. And so one of the big ones is that, over the last 4 or 5 years, there's been a lot of capital flowing into the private markets. 2020, 2021, COVID, markets were going crazy. We had crypto boom. And honestly, a lot of LPs, so institutional investors, family office investors, regular, high net worth individuals and investors kind of went into the market then, which has not worked out too well for a lot of folks.
Right.
And so I think, you went into this period where valuations were sky high. Everyone thought that things were going to the moon. And then, lo and behold, 2 or 3 years later, 2022, 2023, markets correct. We're back down towards, in the private markets and in the public markets, a real correction, right? And so I think that has been a big challenge for everyone, frankly, whether it's the SoftBanks of the world to kind of other, big or smaller VC investors out there. We've had to adjust to a changing landscape where, you don't have companies need to think a little bit more about profitability. Capital is not as readily accessible and available as it was before. When you had LPs and individuals and family offices investing heavily within VC funds as well as companies directly, you had a lot more leeway to actually fund businesses that maybe had unit economics that weren't necessarily profitable yet. But now it's not the case. You really don't have the leeway to be able to, you know, talk about your gross margins or EBITDA margins and not have a real story for how you're going to get to break even, right? People just, well, not people, but in general, the market just doesn't have as much capital or patience to be able to fund all businesses. And so
Yeah.
I think that's certainly been a huge change on all fronts for the private technology markets. And I think also, during that period was a big disconnect, and there, continues to be somewhat of a disconnect between public and private market valuations. When in the public markets, you can invest in great, leading businesses at multiples that are half or less than half of what private market valuations are for similar, leading private late stage technology businesses. It makes it hard to really justify, especially because you don't have liquidity in the private markets, right?
Uh-huh.
You have ample liquidity. You can buy and sell Google any day of the week in the public
Uh-huh.
markets. It makes it a really tough proposition for a lot of folks to go into private market investing when you have also illiquidity that's involved. And so I think, long answer short, I would say just broadly, the industry and macro environment has been a big challenge for a lot of venture capital funds and in general the industry. But, I'm pretty optimistic for 2025 and 2026. I think we've kind of already hit the bottom and are kind of on the way back up. There were a lot of people raising funds, and whether it's small or large funds, that probably shouldn't have been raising that much capital.
Uh-huh.
And I think we've started to see a little bit of a normalization where folks that do have a track record, that do have institutional experience, are the ones that are able to raise capital, and it's a much more moderate amount of capital than what we saw in 2020 and 2021. So, yeah, fascinating times, I think, to be in the market, but honestly a lot of big shakeouts in the last few years.
Sure. Do you have any feel or sense, either personally or just as you're talking to people in the market, what people's sentiments are for the next 4 years, as an example? Like, are people positive, or are they feeling the same? Or what's your thoughts on just
Yeah,
kind of
you
what these next
know,
4 years might hold
yeah, no,
for VCs?
it's for me, I see a lot of positive sentiment. It obviously depends who you talk to. For me, it's quite obvious that, we've gone through this boom and bust cycle of 2020 down to 2022. You've had to let some steam out. And I guess what I'll tell you is I see a lot of investors, like family offices and institutional investors, that are either short on liquidity or fearful of getting burned by private markets.
Hmm.
And as you know from Warren Buffett and others, when others are being fearful, that's
Right.
when you want to be greedy.
Uh-huh.
And so that gives me an indication that, at least for me, I think now is a great time to invest and that we're kind of going into another upswing over the next few years. And so, yeah, I guess, to your question, a lot of the conversations I have with family offices and large institutional investors, which invest in venture capital funds, has been that they are, still waiting for distributions from a lot of their prior venture capital fund investments in, say, 2019, 2020, that just haven't paid out distributions or had many exits because the IPO market has been relatively weak. And also that they have been burned by some of the direct investments they've made into companies where, they were companies that raised in 2020 or 2021 at really high valuations. And now the companies are, valued at lower than that or still trying to grow into their valuations. So they're maybe flat till today. And so I've heard a lot about people who've been burned by VC as an asset class. And so they're fearful to continue deploying capital into it today. And so both of those things indicate to me that there's a real opportunity here to be able to step in if you're able to have conviction in a few great ideas and really, do something that other people are a little bit fearful to do today. And so, for me, I'm very optimistic, but I think part of that optimism comes from perhaps some of the pessimism that I hear from other
Uh-huh.
folks.
Right. Are you, as far as your target investments, is it mostly in the US, or with having an Italian family office, you know, with you, are you looking more globally, or is it more mostly here in the US?
Yeah, so we're a global fund.
Okay.
We don't have any restrictions on geography. I will say, by nature of where AI is being developed
Hmm.
and where a lot of the AI talent is today, we do probably see a lot more of our pipeline and portfolio coming from the US. And by nature of me also being based in Silicon Valley and San
Yeah.
Francisco, I think
Yeah.
that's also the natural place where, I'm hunting for deals. So I think as a result, we'll probably see a good portion, probably the majority be from the US. But I will say I've seen a lot of really great things coming out of Korea, out of the Middle East in terms of investment in AI, whether it's infrastructure, hardware, servers, but also I think even cultivating their AI ecosystem and venture capital ecosystem. And so, as you probably are aware, the Middle East, whether it's Abu Dhabi, Dubai, Saudi Arabia, have always been actually pushing really hard to build out their venture capital ecosystem,
Yes.
investing in local entrepreneurs. Similarly with Korea, they've always been a big supporter actually of venture capital as a broader asset class and also investing in a lot of Silicon Valley funds. And so in both cases, I'm evaluating strategic ways to actually collaborate with both. And so for me, I love not having borders. Obviously, the US and San Francisco will always be home and makes it easy for me able to find, founders here.
Sure.
But if there's opportunities to really collaborate globally, I love finding ways to do that.
Oh, very good. How about just in what ways is, being in America in a capitalist free market society, how has that benefited you again throughout your career and your business model here in the fund?
Yeah, no, absolutely. Look, I think America is still the best place in the world to build a business. And I think will always be the best place, frankly, to build a business, probably for a while.
Uh-huh.
I hope forever. And I just think that it's a place where, you can really achieve the American dream if you put your heart and soul into something and you have an opportunity to really make things happen. Like just within our portfolio, just to give a few examples, like one of the companies that we invested in is a company called Tax GPT. Think of it as like a chat GPT for tax accountants. So it's
Okay.
like a co-pilot software solution where you can type in, hey, I'd like to, get some more understanding about the XYZ tax regulation in California or something. And so it's a really interesting product. Just graduated from the Y Combinator program, which is one of the most prestigious accelerators here in Silicon Valley. And the founder is like a Pakistani immigrant founder. He came here, no technical coding background. He was actually like a journalist, like he was a writer when he came here. And he basically taught himself how to code. He
Huh.
built like two or three different businesses. So he's had multiple kind of entrepreneurship experiences and been a founder a few times over. And it just, it's inspiring to be able to see an opportunity for, someone who comes from basically nothing and doesn't even have the skill set to be able to really harness the resources and an ecosystem that we have here in the US to be able to build that. So I just think it's amazing. And, I think for me also, my parents, came here with nothing. I think they had like $200 in a suitcase of clothes. They came here, they worked their asses off and, worked at a lot of the big, semiconductor companies here in the 80s and 90s. Unfortunately, didn't tag along with one of these like huge, Nvidia, but still, like, it gave them a chance to build a life and opportunities for me to be able to attend like one of the best, the best college in the world, arguably. Coming from really, really humble backgrounds, I think that's something that, you don't really see often in other countries, and you don't have all those types of opportunities in a lot of other countries. So I'm extremely grateful and, hopefully, we'll continue to do great stuff here at Mangusta and building and supporting a lot of amazing US businesses.
Yeah. How about any common misconceptions about capitalism that you encounter? And if so, how do you address those?
Yeah, no, it's an interesting question. I think I think it's very people often think about perhaps capitalist culture as like kind of one dimensional where folks are just interested in perhaps making money and spending money, but not as much in terms of paying it forward, which I think is a very wrong conception of that. Like I think if you look at all the richest people in the world, actually, especially in the US, everyone's made, giving pledges, have made, donations to really charitable, important causes. I think there is often this perception that, okay, well, if you're just focused on making money, what about giving back? Like a lot of the people who have made a lot of money have pledged a lot,
Right.
most of their wealth, in many
Yes.
cases to give back. So I think that's one thing that you sometimes see. To be honest, in the Bay Area, I actually think it's relatively good. There hasn't been too much of a pushback just because everyone is so focused on kind of making it and pushing themselves, right? Like everyone's
Yeah.
building their own startup, building their own business. Everyone cares about, okay, their stock options and so everyone's kind of, in the same mindset where you want to make money and you want to do good for the world. So I think there's probably less of that I run into here, but I think there's certainly a fair amount of um, pushback that you hear sometimes.
Yeah. How about looking back, any particular decision or action you'd say that has been most pivotal in your success thus far?
Yeah, honestly, I think one of the things that I've really been able to embrace over the last probably like 10 or 15 years is just kind of, I don't know how else to put it rather than just like go with the flow in terms of where life takes you and where your career takes you. I will say when SoftBank kind of gave me the call to join the Vision Fund in 2016, I had no idea what it was going to entail. It was a blank slate. Masa had raised $100 billion from the Middle Eastern sovereign wealth funds, a couple of US corporates here. Um, it was really a kind of, it could have been anything, right?
Right.
And for me, it was like, well, this sounds like a really exciting opportunity. I think private equity is obviously a great job and a great asset class, but honestly, the private equity boom was more in kind of the 2000s. And I think this venture capital thing and technology and AI is going to be really, really big. I think when life comes calling and when life comes knocking on your door with a really great opportunity, sometimes you just got to take it and run with it.
Uh-huh.
And I think I've kind of lived with that philosophy in some ways for the last few years of thinking about, okay, joining SoftBank, this is a big risk, but it could also be a huge, huge opportunity to learn a lot about venture capital and technology and have a first row seat to all the biggest things that are happening in Silicon Valley that I wouldn't, otherwise be able to have access to. And then I think, starting Mangusta Capital was also very much of I met these guys, I met the family at a conference. We built a really great relationship. I've always wanted to start a VC fund of my own. To be completely transparent, I've always thought it would be later in my career. But when an opportunity kind of comes knocking on your door again,
Hmm.
and maybe you're not entirely ready, um, I think you just have to take life by the reins and say, okay, I'm gonna try this out and see how it goes because, worst case scenario doesn't work out. You can always find another role within venture capital, but I think I would always be wondering,
Hmm.
what if I'd taken it? What if I'd taken the plunge and, things had worked out? Like, you'd be in such a different spot. So for me, it's just, trying not to have too many of those what ifs.
That's great. Absolutely. How about thinking of like either young or aspiring entrepreneurs? Any advice you'd give to a young aspiring entrepreneur or someone that's in more corporate that's thinking of starting their own thing? Any advice for potential
Yeah.
founders out there?
Yeah, yeah. I think, honestly, the best advice I would have is just like talk to as many people as you can who've either been through the journey or if you know folks, friends or contacts of yours that are VCs, just like get their thoughts on what you're thinking about doing and building. Because I think just the more that you kind of collect knowledge and collect feedback, everyone's going to have a different opinion, obviously. But I think if you start to hear, similar pieces of feedback, or you hear good stuff, I think it's important to get some thoughts from people who've been through it before, whether they're, another founder that's been through a journey like that, or VCs who've seen companies, many, many companies come across their desks, many founders, maybe many business ideas that are similar to yours. I think, having that information and being able to kind of collate that and think about that is really helpful as you start out in that journey. I think the second thing I'd also recommend is potentially finding a co-founder. I think having a co-founder or partner, beside you when you build your business is pretty valuable, especially the first go around. Hopefully you guys complement each other in your skill sets in terms of, what you each bring to the table. But also it's just, moral support. It's
Huh.
it's a really tough journey.
Yes.
Building something, being a founder, and you know this as well. I'm sure it's long nights, dark days, and sometimes you feel lonely, and it's tough, right? So sometimes having whether it's a team or partners or co-founders alongside can be really valuable. So definitely think about that as well.
Oh, very good. How about, and this may be a premature question, but just thinking of building, legacy or lasting legacy through your ventures, how do you think about that, or do you think about that at this point
Yeah.
in your career in Mangusta?
Yeah, yeah. No, I mean it's funny because I think one of the topics we were going to talk about is actually like I've been thinking about starting a podcast of my own, and I think the title was going to be something like legacy, because the way that, a lot of our investors, outside of the Luxottica family are also family offices, right? And these are folks that, maybe they've made their money in one generation, or maybe they're multi-generational kind of families that have, inherited wealth and preserved and invested wealth for a long period of time. And I think legacy is also a super important topic for them as well, right? How do you instill the right values, and what impact do you want to leave behind in the world, and what do you want to be kind of known for? And I think that is a topic that I kind of wanted to potentially explore with some of the other family offices, if we're able to get a few folks on, and you know I think it's not just also family offices, right? Like you probably have thinking or think about, okay, what legacy do I want to have, and myself as well as a lot of founders and entrepreneurs out there. Every business builder out there probably thinks about legacy as well. So it's not just a family legacy, but also, everyone has a legacy they want to leave behind. So anyways, that was a little bit of a tangent, but that was actually, going to be kind of the structure of how I think about maybe doing our own podcast. For me, I want the legacy of Mangusta Capital to be really known as kind of backing the underdogs and backing the founders that may have been looked over by other folks. Because I think for us, Sequoia and Andreessen, they're going to find those repeat serial founders, the Travis Kalanick's, like Elon Musk's of the world that, obviously everyone, admires, and rightfully so, are great entrepreneurs. There's going to be no shortage of capital for them from all these big firms. But I think what's really interesting is finding the folks that maybe they don't have that shiny resume. Maybe they don't have the background that, someone is typically looking for, but they just have that hunger and tenacity to really push themselves, and they have that chip on their shoulder to really achieve something and build an amazing business that they believe in. And for me, I think one of the most exciting things is finding those folks, because it's almost like, kind of a diamond in the rough. Typically, you can actually invest in their businesses at a slightly lower valuation than, if I'm trying to invest
Right.
in Elon's company. So,
Yeah.
so one is there's also an economic incentive to find those diamonds in the rough, but also it's just so inspiring and fulfilling to be able to, root for the underdog and find folks that are super hungry and pushing themselves, but and give them the chance to do that where other people may not. And so I think that's one of the big things that I want to kind of leave behind as a legacy for Mangusta Capital, is being known for backing those really hungry, tenacious, but sometimes overlooked founders and businesses. And hopefully we can see a lot of them really succeed.
Yeah. Do you have a I mean, in an ideal world, do you have a target number of investments in a year that you'd like to make?
Yeah,
Or how do you
so
think about that?
yeah, absolutely. So, our tradition, our fund model in terms of how we project out, how we'll be investing is about 30 companies in the fund total,
Okay.
where our investment period is about 3 to 4 years. So call that, roughly 10 or so, somewhere between 8 to 10 companies per year that we'll be investing in.
Okay. Oh, very good. Yeah, and really kind of last question here. Your personal definition of success. You can take
Mm.
that however you want, but like how do you define success for Kevin?
Wow, that's a good question. Um, it's a very interesting one because there's obviously the traditional material kind of metrics that KPIs that you could probably point to, like, oh, AUM, the amount of, the size of your fund, or the returns of your fund, or the number of unicorns that you have in your fund. Those obviously are all great things. I I would obviously love to push the boundaries and really make those as good as we can as well. But honestly, for me, in terms of success, it's really about making an impact within the ecosystem and the founders and people and co-investors that I work with on a day-to-day basis. Like I think for me, what really brings me happiness and meaning is that, I find a way to really help one of the founders in our portfolio solve a problem that they're working on or get them connected to the right people to make that sale that they've been, really cranking on and trying to make happen. Like, I think for me, a lot of it comes down to making an impact in those relationships that I have, which matter the most to me, which at the end of the day ends up being the portfolio company founders that I work with, the other co-investors that I work with, and our LPs, the investors in our fund that I work with. And so every day that I wake up and I feel like I've made an impact in their lives and their businesses is extremely fulfilling for me. And I think honestly, it's really hard to measure personally, what exactly that quantification is of that value, but it just gives me so much energy, and it what makes me excited to wake up and do this job every day in the morning.
Oh, that's fantastic. Well, good. And that's a perfect way to end this. Right. So thank you very much, Kevin. This was fascinating, fantastic. Congratulations on what you're doing. And we'll share for our audience in the show notes, all your contact info, socials, Mangusta, how to get in touch with you. But I just really want to thank you. This has been absolutely fantastic. So thank you very much.
Yeah, absolutely. Thank you so much for having me on the show, Kip. This is great. I loved the conversation and really felt it was very free flowing. So thank you for making a great discussion.
No, awesome. Yeah. And we'll look for the legacy podcast from Kevin Jiang coming out soon. All
Yeah, hopefully
right.
soon.
Well, thank you.
Alrighty, take care.